So combining those financial and emotional parts, I will also tell you what triggered for Seema and I to buy and what triggered for us to rent. Hello everyone, welcome to the land of tulips. You may have already guessed by now, I'm in Netherlands, the land of colors behind me. Interestingly, Netherlands right now, and particularly big cities like Amsterdam, Rotterdam, they are going through a major housing crisis. There are very few houses available, the prices have skyrocketed, the interest rates are high. So it was very interesting time to talk about, should you buy or should you rent? And this is what I'm going to try and cover during this video. I'm sure you must have already heard this topic in a lot of videos, and probably, like Seema and I, you've also gone through this decision-making process of should you buy or should you rent at a couple of times in your life. I'm not going to say that is it better to buy or is it better to rent. I'm going to try and talk about some of the considerations that you should keep in mind when you make that decision of choosing to buy an apartment or a house or choosing to rent an apartment, house, etc. And these considerations are based on our own personal experiences. For both Seema and I, we've been fortunate enough that our financial journey or journey to financial independence, we've at various points of our life, we've either rented or we've stayed in our own property that we bought. And that is what I'm going to talk based on our own experiences, what made us rent and what made us buy or sell a property and move to a rented accommodation. So before we get started, my sincere request, please do subscribe to our channel if you've not done already. And also share if you feel that these videos are insightful and can also help someone else with their own journey to financial independence and retiring early. All right, let's get started. Typically, buying a house, or even renting for that matter, is not just an financial decision, but it is also emotional, social, and also professional because it is linked to our career ambitions and the location that we decide to work. The same happened for Seema and I. So our decisions in our career and our journey to financial independence at various times when we either bought or we sold or rented a house was based on these same factors. And I'll talk some of these factors, but let's first start with the financial factors. Because this is one of the biggest financial decisions you will ever take in your life. Within the financial factors, it's important to first bust that myth that when you rent a house or an apartment, you're paying rent which is irrecoverable. Because when you buy a property, there are also quite a few irrecoverable costs that you incur. And let's compare that. Renting, it's simple. There are two major costs that are irrecoverable. The cost number one is the one-time cost that you pay to an agent for renting a property. Probably a 1-month rent, in some cases maybe 2 months rent. So that's something that you pay, you never get back. And then you have your monthly rent that you pay for when you rent the property. The rest of the stuff is generally with the landlord that they have to take care. I'm not going to talk about, let's say, gas, water, electricity, because in certain cases it is included, certain cases it isn't, and I'll try and keep it outside both the comparison between renting or buying. So those are the two major factors that you have to consider. On the buying the house, the irrecoverable costs are, there is a bucket of one-time cost, then there is a recurring cost, and then there is an exit cost. The one-time cost is when you're buying a property. So typically you have to pay, like when you rent a house, a fee to the agent. You have to pay property taxes depending on the place that you are living. And you may have even some paperwork costs of that. So contract drawing up and getting it signed by the notary, etc. So those costs together. Typically, depending on the place where you're living in, it could range from 3% to 5%. So that's cost number one. So that's your one-time cost of entry into buying the house. The second cost that you have is the cost of capital. And typically when you are buying a house, you have two buckets of capital. One is the bucket that you put the money towards the house equity when you take a loan. And the second is the mortgage or the loan that you've taken from a bank. So the money that you put, let's for a moment park it there, because we'll come back to that what is the cost of capital on that. The money that you borrowed from the bank, you're paying an interest on that. And that interest is not recoverable because that's the money that you pay for using that funds for the bank. Unfortunately, nowadays, the interest rates, depending on, again, the place where you live in, could be as high as 8 to 10%. So it's a very expensive time for home ownership just because of the interest rates are super high. So these are the two recurring costs. And the third recurring cost that you have is the maintenance of the house. So that is, you may have plumbing issues, you may have long-term, just the upkeep of the house. Mind it, I do not include the upgrade of the house here, because upgrade could include or enhance the value of the house. This is just the regular maintenance of the house. And the fourth component typically, or the recurring cost that you cannot recover, is depending on, again, if it is a house or an apartment. If it is an apartment, you may have certain apartment building fee or a locality fee if you're staying in a house, which is where you're paying for the security, etc., which typically, if you're renting a house, this is what the landlord has to take care. But here, you have to consider that also part of your business case. So these are four major costs that you cannot recover. So the cost of capital, as I said, the one that is your equity, I'll come to that. The second is the interest that you pay. The third is the maintenance that you have to do on the house. And the fourth is any association fee, etc., that you may have or you may incur. And then there is this exit cost. Exit is when you are trying to sell the house. Then when you are selling the house, then at that time, you again may have to engage with a realtor or an agent, and that agent may charge you a certain percentage of the value of the deal that you have to go through. So this is important, that whenever you make that decision, that you take care of all the hidden costs that you have to incur, and you're not just keeping it too simple of saying, hey, if I would have rented, I would have just paid the rent. Here, I'm building equity. Yes, you're building equity, but there is a lot of irrecoverable costs that you have to take care of. Now coming to the cost of capital of the money that you put in. Typically, if you're buying a house property, you are generally taking a loan. If you're buying a house cash, then good, congratulations that you've made it, that you've got so much money. As I've spoken in the other videos, please be careful on there that you do not buy a property that is more than 30% of your total portfolio or a net worth, because then it skews your total portfolio towards the asset that you're living in. Because during your retirement, as well as towards your path to journey to financial independence, it is not easy to accept that capital appreciation, that you can get some kind of income or value out of the money that you're putting there. Assuming that you're taking a loan, then you would probably put anywhere between 10 to 30% of your capital, and the rest you are going to take a loan from the bank. Now you have to also look at that is the cost of capital, in a way that what if you would have put this money in the market, and what returns would you have got? Because there is again another myth that people say, hey, this is not the fair comparison, because when you're renting, you are just paying that money, that there is no recovery from there. Yes, there is no recovery even in buying the house, but then you're getting a lot of appreciation. And that's something which we've also realized during our journey, that whenever we put money, not just towards the property, but in the markets, the money appreciated, and sometimes even better than the real estate properties that we would have if we would have invested. So we've even seen, for example, in the Indian market, if we would have put that same money towards an investment versus us putting towards in the index and the mutual funds over there, the money is gone 3x in 10 years. Because right now in India, the Sensex has touched 75. I hope it remains above 75,000 plus. So that's the cost of capital that you have to also see, that how much is your money making money or could make money versus living in that house. And yes, please, for a moment, let's keep all the other aspects, emotional, social, professional aside. I'll come to that. But this is just a fair or a rational financial comparison that we are doing. So in that financial comparison, as a summary, one is to make sure that you are checking and comparing what is the irreversible cost there, or you can't recover. The second is that you're also seeing that if you would have put this money, or if you put this money into the markets versus into the capital of the house itself, what is the potential for that to grow? So that is also where, what is the potential for this house to grow in the market in future? Now, that's the big question, that how do you make sure, or how do you decide? For us, it has always been, we kept it simple and easy. And that is that if a property that we ever looking to buy, and we realize that that particular property, if we would have rented that same property, what was the return, or what is the percentage of the rent of us buying that property? So if we would have put, let's say, $100 or rupees or whatever in buying that property, and if we would have put it for renting it, how many dollars we would have paid for every $100 that we would have put there. So that's where the rule of thumb we've used is that anything below 3%, if we would have got, then it is better to rent. And that's what I've seen, that in many countries and many markets, especially in the big cities in India right now, the house prices have gone up significantly, that actually the return is anywhere less than 3%. So simply put, what it means is that if that is the case in your situation also, then it is better that you put that money into an index or mutual funds, etc., and let that grow, like even in our case, it grew 3x in India, versus putting that money in the house if it is less than 3%. And it is better to rent that same property or same apartment or a house. If it is between 3 to 5%, then yes, there are these other factors, socially, professional, etc., that can also come into play. And if it is above 5%, that means that you got a pretty decent return, that it's good to buy that property. So that is at least one of the factors that will help you benchmark the below 3, 3 to 5, and 5 plus, that what is the growth of your capital. And again, I want to reiterate, because many people say, hey, the rent yield may be low, but it is because the property prices have gone high, and in future the property prices will keep going higher. But that's also the case for the markets. So again, take the example of Sensex or the Indian markets, and look, and that's the good thing of having that benefit of hindsight. Look at the same property where you're looking right now and see that has it grown in the same pace that the market has grown. And if it has, then also see that, look, what is the irrevocable or the cost that you put from your pocket onto that you could have, not needed to put there. So this is just a quick overview of what you need to consider as whenever you're making the decision for rent versus buy, because this will help you, make a much more rational decision, at least financially. So coming to the emotional side, so that was the financial part. Emotionally, yes, in our life we want stability, we want flexibility at the same time, we want a social standing. Now, based on our own personal experience, it has been that in the initial parts of our career, the flexibility helped us a lot more than stability. We were stable, but that flexibility of being on a rented property that time enabled us to move from a city to a country at a shorter notice. Had we had a property at that stage, it would have been a lot more emotionally, financially difficult to make those bold decisions. So by rule of thumb, my suggestion based on our experience would be that if you've just started a family, or you're starting a relationship, or you're just starting a career, then favor flexibility more than stability. And you can still be stable, by the way, even when you're renting a property. And by another rule of thumb, that if you started a family, you're in the middle part of your career, children have started going to a school or a college in a particular city, then if you have got a clear vision that there is at least 5 years plus that you will be in that same place, then it may make sense to evaluate buying a property and not just renting one. So that flexibility versus stability becomes a good emotional factor to consider. So combining those financial and emotional parts, I will also tell you what triggered for Seema and I to buy and what triggered for us to rent. So what triggered us to buy? It was the time when the interest rates were super low. So we were within the 1 to 2% interest rate. So it was almost like, free money. The second was we could offset even that interest rate against our taxes. So it actually helped us with our taxes. The third was that was the stage in our life that we were looking for stability, and we had a very clear path that for the next 5 to 10 years, this is the place that we will be in, and this will be our base that we'll be using. So it made much more sense to have that sense of belonging, so that emotional part also came into play. But at the same time, we made sure that we did not buy a property that was way more than our, could have impacted our total net worth. So that property was, small enough that it was easier for us to make that emotional decision to sell and financial decision to sell because the markets were high, and move to a rented property because that's when we, used it towards moving in the next stage of our career. So based on our experience, my personal suggestion would be that evaluate the buying and the renting based on the stage of life you are in, the interest rates in the market, the stability that you're looking for versus the flexibility that could benefit you. And the big and last but not the least important point I would say is that don't become too positional. And that is that if you decide to buy, then it's not that you say, hey, now that I bought, this is it. I will not rent because I've already bought. Be flexible that if you think that there is a good time in the market, house is an asset. Yes, there is an emotional part to it, but still as an asset. So if there is a good time to exit out of that, cash out, catapult your career, do it. And the second part of that is that do not buy a property that is very big, a significant part of your overall portfolio, that it becomes difficult for you to sell or difficult for you to even emotionally exit out of it. And I hope this was useful and insightful. If it was, please do like and share the video. So till the next topic, till the next location, hope it's as beautiful as this, and see you in the next video. Goodbye from me. Bye-bye.